And joining me on the line to talk about the ECB and FOMC meetings is George Gero of RBC Wealth Management. George, thanks for joining me today.
Yes, thank you for having me. I think it's been what we call a most interesting week for gold traders.
It sure has been. Let's get started with the FOMC that came out on Wednesday. Were not a lot of surprises there. What are your thoughts on it?
Well, I think probably the fact that they pulled the trigger ahead of the meeting in the morning and were very concerned about a possibility of QE3 coming to an end, or some remarks coming after Tuesday's meeting, Wednesday afternoon, that they were going to cut short the bond buying and look for an exit strategy, is what really spooked the market. That turned out to be unfounded. In effect, what came out of the FOMC meeting was steady on course, keep interest rates low, and try to boost the economy, because the signs that they saw recently were somewhat negative for a quick return to a better economy. And in fact, what was even more interesting, that from what I see, the vote was overwhelmingly in favor of continuing low rates. And in fact, FOMC indicated they would continue to adjust the buying to make sure that we don't stay below their expected inflation target of 2%, which is now running at 1%.
So can we expect more of the same coming out from the Fed for the rest of the year?
Certainly expect more of the same from the FOMC. On top of that, this morning, you had ECB news cut the rate by a quarter point to half a percentage point. And, of course, that did weaken the euro to some extent. On the other hand, normally a weaker euro would be a stronger dollar and would have been a negative for gold. But in this case, it did not turn out to be a negative for gold. All it meant was that the Eurozone bonds improved in price somewhat. And it seems that we have a global agreement on management of interest rates to boost the economies on at least 3 continents. The economies, of course, with low interest rates, has helped the American stock market. And while the American stock market has gotten very strong, it did lose a lot of open interest in Comex Gold because a lot of interest in gold was shifted by money managers to the stock market. And if you look at a picture of 12 months, 12% down in gold, 12 months, 12 to 14% up in stocks, it tells you exactly where money managers have been moving assets.
So now that the ECB has cut rates to a record low, what else could Mario Draghi have on deck in the coming months?
Okay, well, Mario Draghi today indicated that the market made too much out of Merkel's last comments that were bearish for gold about interest rates possibly having to move up in at least Germany. And so with his pronouncements today, the market has improved, and we're now trading at about 1470 in round numbers for the June gold contract. What's more interesting, that there are still a lot of put options out there at 1475, and should the market move higher in the next few weeks, those options will go out of the money and not be exercised, and will remove a possible 1475 to 490 resistance point.
All right, George, let's take it back to the States. Job reports coming out tomorrow, Friday. What do you see happening there? Would it affect gold in any way?
Now, there's some concern usually on a Friday, when you've had a rally the day before, that traders want to do some book squaring and may just want to be out of the market, worried about weekend headlines.
So can we see some kind of volatility in the market? Or?
We could see some volatility tomorrow if the jobs report has a surprise.
All right, George, that was terrific. Thank you very much for joining me today.
Thank you, and I'm glad to have been on with you.
And thank you for watching. Also, don't forget, Kitco News will be attending the Metals and Minerals Investment Conference in New York City, May 13th and 14th. You can check out the link below. Also, you can send us questions at newsfeedback@kitco.com, and you can follow me on Twitter @Alex_Letourneau. Thanks for watching.